Very good. Welcome back to Biz Check, where we are live from Broadcasting House, having some wholesome conversations around various issues. In the last 1 hour, we've been discussing Kenya's reform business agenda and what the government is doing to improve the business environment here in Kenya. We've been doing that with help of John Mwendwa from the Ministry of East African Community. Time now to switch gears and talk about lending to small and medium enterprises, the challenges they face, and how do we deal with this. And of course, we're in the company of Peter Macharia. He is the Managing Director or CEO of Jijenge Credit. Thank you very much indeed for joining us here. First of all, help us understand how is now the credit market in Kenya?
Thank you, O'Brien, for inviting me to the KBC studios today. I'm grateful. Now, the credit market in Kenya is resilient, it's sound and very stable. However, there are a few challenges in terms of the percentage of bad debt is still quite high. Mm-hmm. But for those organizations and institutions that have good credit analysis and recovery systems, they are up to speed on that sector. They are trying to manage and reduce the extent of the bad facilities. Mm-hmm.
And you're talking about the performance of non-performing loans, which have risen. Now we're talking about almost 14.5%, according to Central Bank of Kenya. What are lenders doing to try and suppress this number?
Now, lenders have those of us who have a good credit analysis system, mm-hmm, or department, have elaborate ways and methods of managing or rather ensuring that when the loan is being appraised, before it is disbursed, they've looked and analyzed it and ensured that all the ratios are good. The debt burden ratio and the ratios in terms of payback and all that are up to speed. And before any approval is done, they ensure that they don't overcommit the borrower, or they also don't finance lifestyle. Because another challenge we've been facing with some applications is that the money is being diverted to the wrong aspects. Mm-hmm. Yes.
So, and in the process, I mean, you're having a situation whereby, because of the high levels of non-performing loans in the Kenyan market, you're having a situation where banks are becoming very risk-averse. They're not willing to lend. Mm-hmm. And this is also affecting the growth of the SME sector, mm-hmm, and a sector that constitutes about 98% of all businesses in Kenya. So what will happen going forward?
Well, the beauty of it is that the interest rate, CBK, Monetary Policy Committee, met last week, and the rates were not increased. They are still at 7%. And therefore, the traditional lending market, the interest rates have not been increased. Mm-hmm. However, most institutions, as you've said, are risk averse. And it is because the market has not fully opened up. So the issue of really understanding the borrowing, the borrower, and how the money is going to be paid back is very key. But gradually, as the market and the vaccines are rolled out and the market opens up, the issue of being too alert on risk will be moderated and the banks will relax. Mm-hmm.
Yes. And I was, scoring some data from the Central Bank of Kenya, whereby they said that in the last 1 year, lending institutions turned away about 28% of all SMEs that approached them for credit, which is actually serious. How do we improve this going forward?
Well, that percentage is true, and it is it's now upon the SMEs to improve on their financials, because financial institutions like us, who use traditional lending methods, rely more on records, and therefore I've always been advocating for customers and borrowers to always have records. Even if it is an M-Pesa statement, ensure that whatever you are being paid or whatever you are paying out passes through either a bank account or some form of record like M-Pesa. And at Jijenge Credit, those are the analysis systems that we put in place, because we still use a traditional lending system whereby we have credit analysts and officers who really look at the application to ensure that we do good lending and we do proper lending. Yes. And
a lot of these SMEs that are turned away, most of them were not turned away because of lack of credit worthiness. A lot of SMEs, sometimes they don't have good record keeping systems. They don't know how to apply for loans. They don't know how to how to give the right information. So what do we need to do to train our SMEs on, number one, how to apply for credit, and number two, how to give the proper information that is needed?
Well, we need to really train and create awareness on to all SMEs, especially the startups, because the biggest challenge for that huge percentage that was turned off is not in the corporate segment. It's on the micro, small and medium enterprises, because they lack the training, they lack the knowledge on how to keep proper financials. And it's maybe I can call upon business management organizations and various organizations, even in financial institutions, to train and set up training forums whereby they can be trained on proper financial controls, tax, and issues that are geared towards proper loan application processes.
In your day-to-day conversations with the SMEs, because you have a lot of knowledge, because you have been in the banking industry for many years.
Yes.
What would you say is the biggest challenge when it comes to lending to SMEs?
Well, the topmost challenge to lending to SMEs is lack of records. Most of them prefer handling or trading in cash, avoiding the aspect of depositing and withdrawing money from or making transactions through the mainstream banking system. And even when, because as an organization we do we set up forums and train SMEs, we always recommend and appeal to them to have and keep proper records. Yes. Bank or deposit in your M-Pesa account and pay through your M-Pesa or through the bank. Issue a check here and there, so at least you have proper records. Even it's also a twofold benefit. You're able to appease the bank or financial institution where you're applying for a loan, and on the second part, you're able to know whether you're making a profit, what taxes you're going to pay, and even plan. You're able to tell your turnovers. But without proper records, it's groping in the dark, which is very dangerous. It's called autopiloting.
Which does not work in the banking industry.
It doesn't work.
Yes. So the first point of entry is to ensure that you have your data right.
Yes.
You have your history in place.
Yes.
And what is the next point?
The next point now is to do a proper business SWOT analysis. Because if it's a startup, you should not start a business because it's been started by a friend or you've seen many businesses doing it. Always do a proper research, proper SWOT analysis to ensure that whatever business you are venturing into, you are sure of it and it's something that is viable. Otherwise, if you don't have that statistics, you'll close. or end up borrowing, and you won't be able to pay the facilities. Yes.
And there's also something that you talked about, borrowing to sustain your lifestyle. And banks in Kenya, I mean, that is always a no-go zone for any bank.
Yes.
But you still have a lot of SMEs, applying for loans that are not geared towards expanding their business. Clearly, when you look at them, how do they end up in this kind of a situation? Is it lack of knowledge or ignorance?
Thank you. Number one is lack of knowledge, because if you borrow, let's say, money for working capital for your business, you should not divert it into purchasing a car, because or purchasing furniture, because once you buy furniture, either household furniture or whatever, that's money that will not generate any income. It will be lying idle. But if you you borrow money and take it to your business, you'll be able to generate. Once you sell, you get a profit, so it's going to pay back itself, and you're going to be left with something for the business. The other issue is peer pressure. If you see a friend or a schoolmate with a nice car, or a fellow business person with a nice car, you also go ahead and buy. But you see, each person has their own individual strengths. You're supposed to analyze yourself and ask yourself, is time ripe for you to invest in a non-profit generating project? So those are the key areas that SMEs and borrowers need to look at. And as financiers at Jijenge Credit, will analyze. We ensure that you don't come to borrow to go and buy a car that is not meant to generate an income. But if you're buying it to take it into taxi business, to a commercial business, to transport goods, there we will support you in a very short turnaround time. And
also because of lack of knowledge, I mean, you see SMEs borrowing in the name of the business, but of course, you have a situation whereby this borrowed money will not end up in business. I mean, it will end up to do other business, other things. How do they avoid that kind of a situation?
The number one thing that financiers need to do to avoid such a situation is to do something that we call customer visits. Whenever you lend to a customer, before, during, and even after lending, you're supposed to physically visit that customer or client, see whether the stock that he promised to purchase has been purchased. And those visits, they discourage potential borrowers from diverting borrowed funds into other projects that are not viable, that are not meant to be funded. And therefore, I think that that's an area where most institutions fail, because they prefer sitting in that corner office and don't venture out to do those customer visits.
Before you borrow, I mean, there are questions that you have to ask yourself as a business owner. What questions are these?
The main three questions that a business owner needs to ask himself when he's borrowing is, number one, is the product that is going to borrow for going to be sold? Does it have a market? Number two is competition. You see, when you buy a product, there is competition, and the probability of you being run down by competitors is very high because of various source markets. Therefore, you really need to look at where your competitors are purchasing their goods and where you're also going to purchase your goods. Because if you bring expensive goods, you'll end up with dead stock. Then the third one is, do you have a proper distribution line? Because you can have very good goods, high quality goods, the right price, or rather cheap goods, high quality, but you don't have a market. You've not advertised yourself out there so that you're able to cover as wide a market as possible. Yes, so those are the three key areas.
And there are also questions, that SMEs grapple with. As you have a business, and you have managed to do, some savings, or probably maybe in the business account you have about 1 million shillings, from savings, and your business requires 1 million shillings for expansion in the next 1 year. Would you advise anybody to use their cash reserves or to go for a loan?
My advice is straight, use your cash reserves. It's cheaper. Because any loan, whether from a microfinance or from the bank or from even friends, is expensive. Why am I saying that? Is because when you're in business, any saving, you're supposed to ensure that the business you're undertaking is very efficient and cost effective. So the cheaper it is for you to carry out that business, the better for you. So if you're able to do, or rather support your business with your own funds, so be it, as opposed to going to a financial institution and borrowing. Because when you borrow, there is interest, there are processes that that party cost that you need to pay, and it is that interest. It's a saving you'd have done to recoup back into your business.
But is it advisable for you to use all your cash reserves that you have saved as a business? I mean, to expand, whereas you can access the same from a lending institution, probably maybe at a fairly negotiated cost.
Well, the beauty of savings is that it helps you in future, and it acts as a stopgap in case of an emergency. But if you're able to, you've given an example of 1 million. If you're able to use half, so that half of it goes into business, then the other half is retained as savings, it's a safer bet than borrowing. Yes.
So if you have, for example, I mean, using the example of 1 million, I mean, so it is advisable to use 500,000 shillings, from your savings as a business, and then go for the next for the rest, 500,000 from a lending institution.
Yes.
What factors do you have to consider when you're approaching, when you're choosing the bank to borrow from?
When you're choosing a bank or a financial institution to borrow from, the factors to consider are, number one, the cost of funds. Number two is how flexible
So this is how much interest you're going to pay on the loan.
Apart from interest, there are other charges that go with operating that account, operating a loan account, and being served, or even processing the assets or the securities that you're going to provide. Those costs will be borne by the borrower, not by the financial institution. And
for example, the things like a stamp duty.
Yes, if you are doing, if you provide title deed, there's a stamp duty to be paid, there's a conveyancing cost to be paid, all those costs.
There's also the legal fees.
The legal fees are going to be paid by the borrower. Apart from that, there are other costs for the bank, like ledger fee, account operating costs, interests, and maybe insurance for that asset that you're going to provide. Therefore, all those costs, you must put them into account, because it's a cost on your part, and it's a cost that is going to eat into your profit or your capital for that matter. Therefore, shop around for a bank that is going to have a good enabling environment, and if you're engaging the bank, request them to allow you to negotiate all the legal fees, all the insurance costs, all those that party costs. They should give you a list of service providers, so that you go out and seek to see whether you can be given a discount on their fees and charges.
What was you were about to talk about the other point? factors to consider, and one of them you have, of course, said is the costs.
Yes.
Apart from the interest rates,
Yes.
what are the other? What we usually call the hidden cost. So, what are the others?
The other issue to consider when you're borrowing from a bank is the relationship management aspect. How will the bank handle you in case you face headwinds? What do I mean by that? You see, all businesses face challenges. And at some point, if you have a loan, you find that you're not able to pay. When you approach your bank with that request that this month you want to maybe receive a loan installment, or you don't have money to pay this month, will they accommodate you on that request?
So this is something like know your bank.
Exactly, yeah.
So I mean, how do you get to know that, honestly speaking?
Well, there are so many ways of doing that, because you need to have contacts. You can compare and listen to their existing customers, and also the person who is opening that account, your relationship manager. Talk to him, ask him, in case the worst happens, if I'm not able to pay this loan, what is the grace period that your bank gives? Are you that flexible? And another thing is, does that bank or financial institution operate an open door policy? If you want to see their boss, their CEO, how easy is it? Because most of those decisions you're talking about are done by the CEO. So in case you face challenges in repaying your facility, is the CEO's door open so that you can go and put a request on his table, request for 1 month, 2 months, or 3 months, or even 6 months?
But is that practically possible? I mean, talk about a bank that has 5, 10, 6 million people. I mean, is it practically possible for the CEO to handle every case of a borrower, honestly speaking?
Well, I'm not talking necessarily about the CEO, but they are regional managers. They are regional.
Oh, you're talking about somebody like the branch manager.
The branch manager, or the regional boss, or the person in charge of of credit. Those are people or officers whose doors should be open. They should be accessible to their customers, so that they can listen to what is happening on the ground. Yes.
And because, I mean, these are institutions whereby, people change. Today you could be the branch manager. Tomorrow you're not there. So your position has been taken because of various reasons. So how do you countercheck to confirm that whatever information I'm being given by the credit manager is the official position of the bank or the lending institution?
The best way is to look at the company policy, so that if the policy is to recover and to sell a customer's property after, let's say, 6 months, and another, of course, there is the law that gives the timelines, but the law is one part, but it is written on one part, but there is that accommodative atmosphere, whereby if the law says 6 months, as an institution, you can extend to 9 months, so that you give this customer a window to be able to reorganize themselves and start paying back the facility.
Let's talk about, you want to open, yes, you have your idea of an SME's business that you want to go into. You're ready to open a bank account. And of course, in a market like ours, whereby you have, thousands of SACCOs, you have almost 43 commercial banks, you have non-deposit taking microfinance and so much. So what factors do you have to look at, when you're opening a bank account?
The main factor that you need to look at is also costs. And then the first one is costs.
What exactly do you mean by cost?
Cost is the cost of transacting. How much do they charge you to withdraw cash over the counter? Do they charge cash handling fees? Do they charge extra fees on various high-end service centers? How much do they charge? Then the second one is maybe there are outlets, there are channels of cash channels or channels of paying cash. How many branches do they have? Do they have agents out there in the field? Which agents whom you can use at your convenience? Or not necessarily you, maybe you have people who pay you. How easy is it to find a pay point? Maybe an agent for your customers, because maybe you could be having rental houses. Are there agents near the shopping center where your houses are? So those that convenience is very key, because it cuts on logistical costs. Maybe you need to travel to visit a bank, or you need to travel to visit an agent. So all those areas, all those things when put together are very important before you make a decision to open an account. Yes.
You have done all that groundwork, and you've gotten your facility with a lending X. You've invested in your business. So how do you ensure that you repay that loan? Because this is a loan. Let's be clear here. There's no bank which is out there to give money for free. Banks do not have their own money. I mean, that money belongs to people. It belongs to investors. It belongs to customers. So how do you ensure that you have a well-scheduled plan on how to repay that loan?
The first thing you do is request the financial institution to schedule the loan repayment date to a date where you feel that you'll be having the funds, or the funds will be in the account. Number two, as a borrower, you make sure that every due date, or even before the due date, you have put enough money to ensure to cater for that loan installment. And then the third item is to ensure that as a borrower, your sales are way above the installment that is being recovered on that day. And then the fourth item is, as a borrower, you need to now ensure that you don't sleep. You work very hard. Although these days people say you work smart.
You work smart.
So that you make sure that you're able to repay the facility. Yes.
I have done all that. I have a well laid out a loan repayment schedule with a bank. I have also opened my shop, and I've tried to be as smart as possible, to make good sales. But come the repayment time, I mean, I don't have enough funds, to repay my loan. What should I do?
The first thing you should do is visit your bank. You visit the manager, or your relationship manager, or the person who lent to you the money, and express your fears, so that you see whether
So you don't have to wait for the due date?
You should never wait for the due date, because failure to engage the financial institution will cast you in bad light. They might start thinking that you are borrowing the money to run away. So engage the lender. Don't shy away from engaging him, because it's normal. You're not the first one to either fail to pay or have those challenges. Sit down with them, and more so do a letter requesting for either a reschedule of the installment date, or you reschedule the installment amount, or you give them a concrete date when you feel that you're going to get money and pay the facility. Yes. And
it's also proper to put in mind that the longer you delay in repaying your loan, or the longer you reschedule your loan, the more interest you're going to pay.
Definitely. And not apart from interest, there is a penalty rate that is charged over and above that, because the money that was being expected from you is, as you've just said, that the money belongs to the investors or the public or to the depositors. That money that you are going to pay was being also expected to be lent to other borrowers.
Yes.
So if you delay, the financial institution will be forced to look for funds elsewhere at a cost, of which costs you're going to be charged.
So the bank will also be forced, or the lender will also be forced to look now for money elsewhere in order to lend to somebody else.
Exactly.
And of course, because the bank is going to be charged by also the other lender, so they're going to ensure that you're the one who is going to pay for that transaction cost.
Exactly, yes.
And it's going to be expensive.
And it's called a penalty rate. It's called a penal rate. Yes.
And it ranges between what percentage?
It ranges between, well, it varies from one institution to the other. And it's usually a certain percentage over and above the existing interest rates. So that it will also discourage, it's meant to discourage you from failing to abide by your promise, or failing to, or contravening, or failing to go by the agreement. Yeah.
And of course, when you approach a bank with a request that you reschedule your loan repayment period, of course, it raises the bank's antenna.
Yes, yes.
And now you are put into a bracket whereby now you have to be observed keenly.
Yes, yes.
So it is not a highly encouraged practice.
True, it's not advisable to start playing or failing to pay your loan on time, because what happens immediately you fail to pay your installment on time, your facility is graded. Like in our organization, we have grade 1, 2, and 3. Or rather, you are put under an area you call watch, account under watch, because now you are now putting the bank staff on high alert, because they can see the probability of you failing to pay the facility is very high. So now they will monitor you more keenly. They will remind you if you are supposed to pay on 10th. They'll start reminding you on 5th that Mr. So-and-so, please remember your installment is supposed to be paid on 10th. Don't forget.
You start receiving phone calls.
Yes.
Look, let's for example paint this kind of a situation. I mean, I have a loan repayment schedule whereby at the end of every month, I'm supposed to pay, let's say, 100,000 shillings, to the bank.
Yes.
I get to a situation whereby I don't have enough cash to buy stock, but I have money to pay for the loan. Is it advisable for me to pick the loan, a repayment fund, and invest it in stock? Or what would you advise an SME who is in that kind of a situation?
Well, my advice would be twofold. Number one, talk to your financer and see whether they can you can pay. Then they give you a temporary facility to go and buy your stock.
So another loan.
It's called an overdraft. You see, you have loans and overdraft. You see now what you're paying monthly and regularly is a loan installments. But because the money you had to buy stock is what you used to pay the installment, you can request for a temporary overdraft. So that you buy stock and pay back the overdraft, then you continue paying the installment. Number two, you can flip it the other way around. Talk to the your suppliers, request them to give you goods on credit, either 30-day credit, 60-day credit, so that now as you sell them, you pay them back. And it's a cheaper option.
It is a cheaper option.
It's a cheaper option.
How many times should you ask for a loan rescheduling process?
As many times as possible, depending on the environment and your financial situation, because business, as I say, it is full of ups and downs. There are high seasons and low seasons. So when it's a low season, always speak out, engage your financer and say, this is the situation I'm in. How can you help me?
But you're saying, you're also saying that, the more you request, the more you raise the antenna of the bank. I mean, you definitely go into the watch and account list, which is absolutely not a very good account. I mean, list to be in. So if you can, as you are saying, I mean, if you can avoid asking for a loan reschedule, the better for you.
Yes, the better. But you see, as however number of times you request for that accommodation, at some point you'll break even, because it shows that your business is growing. There are activities happening in your business, and that relationship, it's a mutual benefit relationship, because if the bank gives you a temporary overdraft, they get something out of you. On the other hand, that overdraft, that capital you've been given, you sell goods and you get some profit. So it's a mutual relationship. Yes.
How many times do you have to default before your loan can be declared an unperforming loan?
The law says it's first installment. If you fail to pay the first installment on time, you are rated as a defaulter. However, if you come up with a proposal on how to pay it, you'll be accommodated by the institution, depending on which institution and the extent of the failure to, and the extent of the company policy. Yes.
But I mean, failing to service your loan once doesn't qualify your loan into to an unperforming loan, right?
It automatically qualifies or puts you in as an unperforming facility straight away. Failing to pay the first installment,
you automatically go into that list.
You automatically go into that list, unless you work very hard and redeem yourself so that you clear the arrears. But the moment you have arrears, it's you're put on the you're clustered. You're moved from regular to an irregular account.
Where do you move to next after that's irregular?
After that, you move now to default.
To default.
If you totally fail to pay like 2-3 installments, you move now to default grade 3 account, and it's your account now is moved to the debt recovery unit. It's moved from the mainstream bank, mainstream accounts, and moved now to a special unit to recover the facility.
And what happens once you've been put into the debt recovery unit?
Now there you're given the people who will be engaging you are the financial institution lawyers and debt recovery officers, because you've totally reneged on paying your facility.
So you're almost being auctioned. The next step is you're being auctioned.
The next step is they seek court orders to repossess your goods, or they send auctioneers to you, and that is it.
Look here, I mean, you're an SME, because in the last almost 45 minutes, we've been learning the pros and cons, of borrowing. And this is what you would call a borrowing 101 lesson, from a banker and from a long-time financier. These are the steps that you have to follow. Otherwise, your business is not going to survive if at all you're going to remain in the lending space. And we are at that stage whereby now you have been declared, and your account, your loan has been forwarded to the credit recovery unit. At that point now, the bank has the liberty to auction your business, or to auction your collateral to pay for the loan.
They don't. Financial institutions don't auction immediately. You'll be given demand letters. You'll be requested to. They'll call you. They'll write to you and give you an official demand letter, giving you a certain number of days to pay up. Then you'll be given another one, and they'll, if possible, they can visit your shop or your premises, or request you to visit the institution, so that they can get to hear the gist of the matter. or what are the real challenges facing making you fail to pay the facility. Then thereafter, the legal team will be now tasked with the aspect of now recovering the facility or your assets.
And this is the point where you hear business people, changing their lines, their mobile phone lines, changing their residential address, to avoid being traced. By the time you're getting to this point, it's clear the bank has also sensed that you're not keen enough. You're not willing to pay this loan.
That's true.
So by the time you get to this point, or let's assume that you've gotten to that point whereby now your loan has been given to a credit recovery unit, is it possible for that loan to ever go back to regular loan product?
Yes, it happens. There are people who are able to redeem themselves. If you have several assets, or let's say a good example is those people who supply the counties or some agencies that delay in paying. But as you're being pushed to that corner, your payment is being processed. Then it comes in lump sum. And once you pay off the arrears and the debt, you redeem your image and yourself. Mm-hmm. Yes.
And even as your loan is being pursued by the bank's loan recovery unit, the interest rate is piling up.
Yes, the interest rate piles up.
And the penalties are also piling up.
Yeah, the interest rate, the penalties, and now over and above that, the legal costs, because now those lawyers or those debt collectors will be dispatched, will need transport, they will need legal fees, they will need, in some cases, they even investigators to be put on, to be paid, because as you just said, some people switch off their lines, change their residences. If a car has a tracking device, they remove those devices and throw them away. And in some worst case scenarios, they even vandalize the vehicle. Because just as much as you find that this person doesn't have money to pay a loan, they now start surviving on the asset. They remove the door and sell. They remove the tires and sell. They remove the engine and sell.
So by the time you're coming to recover your car, it's a shell.
Yes. So those are the areas that now we always request customers to be honest, because lending is purely based on character. If your character is not good, there you are. You'll find situations like those ones I've just mentioned, whereby somebody changes all his lines.
And so the last point for business is now at the auctioning stage. Mm-hmm. Your business is facing auctioneers, Hammer. Mm-hmm. Can you reverse that situation?
Yes, you can. If you're able to get cash in lump sum, you're able to pay off the facility, you reverse the situation, because the bottom line for all financial institutions mm-hmm. is their money, mm-hmm. not clients' assets. Mm-hmm. And therefore, if you're able to pay off the facility, mm-hmm. nobody has any business with your asset.
And by the time you get to that point, the lender has already now shared your details with Credit Reference Bureau?
Definitely.
Is that so?
Yes. Mm.
At what point do they share your details with CRBs?
By the third month of having failed to pay the installment for 3 or 4 months. Mm-hmm. Yes.
They share your name with CRBs?
Your name is shared with CRB. Mm-hmm. But you see, that one only now deters you from borrowing from other organizations.
So the unfortunate thing about being put in CRB is that now I cannot even go to another lender, borrow to pay you.
Yes.
because my name is already in the system and I've been blacklisted.
Yes.
So unless now I get money from friends, or I sell some of my assets.
Yeah, you can still get money from another lender, a bit at a slightly higher rate, because now you are a high risk client, and therefore you see now it's your acts, your character is costing you, is becoming an expense on your part.
You're becoming a liability even to yourself.
Yes,
because now banks are charging you more. They're punishing you. Because we have to wind up, it's been an interesting discussion. So what do you need to do as an SME to ensure that you do not ever get to that point, or you do not plan to ever get to that point?
Number one is to ensure that you do proper research and calculations, because money borrowed, the solution is to pay back. In Kiswahili wanasema dawa ya deni ni malipo. There are no shortcuts, and there is no court that you will go to and they tell you don't pay that money.
Your loan can't be forgiven.
It can't be, because that money came from some point, and it's either the public that will lose the money, or the investors, or the institution, or the person who created that fund to lend out. And therefore, the other aspect is to ensure that you do business that you love, because business has ups and downs, and when it's down, you really feel discouraged. So if you have a business, or you're doing a business that you don't love and you don't cherish it, you really lose that traction and now lose that gist of pushing on even when times are hard. Yes.
So you have to engage in a business where you have passion.
Exactly. You must have passion for that line of business that you've chosen. Yes.
And what do you need to do to ensure there is a proper business management? Because it is very critical for any business.
The solution for proper business and proper business management is training. There are very good courses that are offered by some universities in town. Very short courses, 1, 2, 3 weeks. We also, as a Jijenge Credit, we also offer consultancy. And to our customers, it's free. We offer that service for free to our customers, because we don't want them to go to a point whereby they are not able to pay our facilities. And the third item is get a mentor. Someone who will take you through, who's a senior to you in business, who understands the business world and the challenges in business, and they will give you solutions. Instead of waiting for problems to now happen to you, then you start learning with your own problems. It can be quite frustrating.
Very good. Yeah. Any other lesson we have to learn from you before we allow you to leave?
The other lesson is debts are not bad, and always engage your financer when you have any financial challenges.
So debt is not a sin, all right? Go out there, have a proper business plan on what you need to do with the money that you're going to borrow. Approach a bank, borrow, and also have a very good debt repayment plan. Well, we've been in class learning the pros and cons of borrowing and approaching a bank, and what you need to know before you even decide that I'm going to borrow from this bank. You have heard it all from Peter Macharia. He's a long-time financial expert and also the CEO of Jijenge Credit, joining us this morning. My name is O'Brien Kimani. We do this again every Thursday right here on KBC Channel 1. Coming up next is Tamurini with Timothy Kipnusu. Stay right here for that. Otherwise, thank you and have a beautiful afternoon ahead.